the key is the shareholders, because of course all the regulatory approval follows its own path and it's in the hands of great professionals. But what is going on here? 3.5 years ago, BBVA had the opportunity of buying Sabadell 5 times cheaper than it is pursuing now. What does that mean? That the value creation of Sabadell is much faster than the value creation of BBVA. And therefore, the problem is that the price is not right. The price is completely insufficient. It was insufficient when the offer was made, but since then, BBVA has dropped an 11% its value. And as it is an all shares payment, therefore the value that we would be receiving would be 11% lower than the original offer. And why is that? This is happening because the Mexican banks in pesos have gone down by 32%. And as 50% of the proceeds of the income and the profits of BBVA come from Mexico, it's only logical that their value has dropped.
So that's your key argument. The exposure to emerging markets is a risk in your view. That's
Absolutely.
what you're taking.
And that's what the board said. That's what the board expressed. The board expressed, it said first the price was not there, and second that it was a very volatile offer. BBVA de facto is not a European bank. 70% of its income comes from outside of Europe. It presents itself as a European bank, but it's an emerging market bank. And that's why the volatility that it brings to the table is much bigger. There are 3 elements when you are considering a consolidation or a takeover or a merger. And the 3 are very relevant, and this one doesn't have it. The first one that it has to have is price, and it doesn't have price. The second that is very, very recommendable is that it's friendly, and this one is hostile. And the third one is that it doesn't have to have a lot of complexity around it from a regulatory perspective. And this one has huge, because there's an upheaval in Spain against this transaction.
And stock performance is your way also to derail the deal potentially. You've announced some higher payout dividend to your shareholders. Is there more of this in the pipeline potentially?
No, why should there be? There are no poison pills, there are no straight. We follow exactly the track that we had anticipated much before the offer, much before the hostile takeover. We said that we would distribute everything above 13% core tier 1 capital ratio. That's what we are doing. That's 2.9 billion. That's 29% of the current market cap of Sabadell. So in 18 months, people are going to get almost 30% of their investment in payouts.
And what if the offer is improved? Then would you change your mind?
It's not for us or not to change our mind. And of course, it will help the shareholders, but it has to be significant. It has to be significant, and therefore, that would give them, of course, a greater chance if they paid the fair value. But they are far from there.
What about the argument, again, the CEO of BBVA yesterday saying that it's good for Spain, that would give an extra 5 billion euros of additional lending capability for the country?
That is another out of thin air, non-justified number.
They say it's independent figures that came up with this number.
Yes, they can say whatever they want, but the precedents are very clear. So when Popular was taken over by Santander, 2.5 years later, the liabilities were there, the off-balance sheet was there, it was the sum of the parts, but they had lost 67% of the assets of SMEs. Why is this? We have 1 in 2 SMEs in Spain.
Yes.
66% in the Catalan market, 60% in the Valencia region.